Now you understand, okay? When we are making a point with respect to the substantive procedures, you have, when you do the section B question, we have lot of things which has been involved, okay, lot of things. In some cases we will not find, see, this is where in some cases it's not, we will find it very way which is rights and obligation, which is with respect to valuation, which is with respect to classification. Substantive procedures, we have to be very focused on that, okay? So, but what it says, substantive procedures, assume, just a reminder, we will go with this, okay? When you are talking about completeness, means we have doing the audit, but we are working on multiple aspects, stating that whether the things which we have done is totally as per the procedures, okay, whether we have followed the procedures or not. If you take completeness also, what we are doing, we will say procedure, test counts to the detailed inventory listing, means we will see that how from the serial number we will go from 1 to 10. We will say that one listing is there. In the previous question which we have done on Saturday, is that what we have done, they have said that it's a perpetual inventory. Perpetual inventory means at least it has to be counted once. Fine, it has to be counted once. When we are counting it, you have to mark it separately. So these are the things which we want to know, make sure that things are working as per the procedures. Where inventory count is held in the third party, there also we have done, is right? In the question it has been done that inventory has been located with the third party, they have not done the inventory count. Okay, they have not done the inventory count. Then what is the alternatives? What is the alternative procedures we have to work it on? Is that when we have the confirmation from the third party, where we are receiving confirmation, it is a external confirmation. Is that external confirmation? We have, if you remember, internal confirmation and internal sources, external sources. External sources confirmation more reliable. Internal sources confirmation less reliable. If you are getting any confirmations, is that we have to think over the procedures. What is the procedure we are going to get? We will compare what is the gross profit this year and the last year. We have done, if you remember, I'm just relating to the question what we have done. They said that gross profit has been increased, net profit has been decreased. Then there is any misclassification is there or not? That is the reason we will do. Why we are doing compare the gross profit percentage to the previous year. If I remember, 57 to some 60% is there, gross profit, whereas net profit is less than in single digit, something was there. Then we should know whether we have allocated the expenses in a right way or not. These are the things we are talking about, the scenario based with the procedures what we are doing. Complete the disclosure checklist. We have done this. If you remember, similar to that, what I remember, I am recollecting it. Is that there are some items are there in the list and some items are not there in the list. Then what is the procedure we have to do the items which are not in the list? Fine. These are the things which we have to be taken into consideration. Is that we will have the checklist. As per the checklist we are working on during the procedures or not. That this is with respect to completeness. We have done with existence. Existence is physical inventory count we have to do. Perpetual inventory, periodic inventory. The most challenging part is perpetual inventory. Continuous inventory movement is there. Is that you refer you refer 10 question papers, you will find at least in 8 question papers perpetual inventory. Continuous. what is the procedures we will adopt when there is a continuous inventory system will exist in any organization. Fine. Next, rights and obligations. Rights and obligations are almost, see, similarity is there. Similarity is there. What we say, rights and obligations, whether you are owning or not. Is that whether you are owning or not? That's the basic thing. What it says, there are so many. Here, if we have done in one of the question, I don't know where it is there. We have said that it has been billed, but it has not been transferred. Is it right? It has been billed, it has been not been transferred. There is something with respect to spares. Okay, there is something which we have covered with respect to spares. Spares has been billed, but it has not been transferred. It has been at the location of the supplier only. Then we have to make sure that how it has to be taken into consideration. Fine. Now, what we are doing is verify that any inventory held for third parties is not included in the inventory by observing whether segregation during the inventory. If it is, see, when we are talking in terms of inventory, is that inventory what is there in our own location? Okay, what is there with our own location? Is that inventory what is there with the third parties? Is that inventory what has been billed but we are not received? Is that inventory that has been billed but not received? We have paid the amount but we have not received. Is it right? We have paid the amount but we have not received. What are the procedures when we are talking about the inventory? How we have to segregate all these cases under different conditions, rights and obligation. If we are having inventory at the third party, verify that any inventory held for third party is not included in the end of inventory count. Is that anything held in the third party? Now, what are the forward procedures we will see? The first one, with respect to what? With respect to third party. With respect to build and hold. Is that with build and hold? For any inventory where inventory has been sold but it is held by the entity until the customer requires. This is with respect to what? This is with respect to sales. Is that this is with respect to sales? See, we have built the inventory, we have that hold it automatically. Once we have built it, we are not delivering. We will deliver within next 7 days, 6 days, 3 days. But once we have built it, it is not our part. The physical it will be there in our location, but we are not going to have the ownership rights. When the inventory has been sold but is held by the entity until the customer identify that inventory, it should be segregated during the inventory count so that it is not included in the inventory. Simple way of explaining. If we have billed it, you should not include. If it is there in the third parties, we should not include. Is it right? Confirm that any inventory at the third party is, whether we have to also confirm, is there any inventory held by the third party, have we included or not? Is that have been included or not? Anything. See what will happen, you will have the inventory. Is it right? You will have the inventory list. When you have the inventory list, definitely, very clearly, it's not, there is nothing to be hidden. Okay, what is there with respect to our physical location? Okay, what is there with respect? What is there at the third party? What is there at the third party? What is build and hold? Okay, what is build and hold? Everything will be separately segregated. The only inventory what we are doing is we are taking the inventory what is there with us. Is it? What? In the end, we will say that this much inventory is our physical location, this much inventory is in the third party, this much inventory is we have built it, sold it. Is it right? Means you have the purchases, you have the sales. This is why inventory is very sensitive, because when you are talking in terms of inventory, inventory is the center stage. One side you are purchasing, is it right? One side there is a purchases, the another side there is a sales. Another side there is a sales. Means you have to match, how you have to be very balanced, very tough. Things are has to be very, which one we have purchased, which one we are sold. Is that we should not have double counted. If we have billed it, it have to be excluded. Is that if we have billed it, as simple as that. Is that if you have billed it, definitely it doesn't belong to us. We have to see, if you go to any reputed furniture retail showroom, okay, any place at I am talking about, is that what happens if you have the furniture, is that you will find it very clear, but it has been already sold. What they will do, they will put a card on that, they say that it has been sold. Is that they put one placard on that saying that it has been sold. That again means they have not delivered it, but they have been sold it. Is it right? Likewise, you have to be in that. You will have the inflow will be there, you have the outflow will be there. Any outlet you see, any furniture, see, now you will have so many new signature style furniture showrooms. Is it? This is what it says. Review any loan agreements mode meetings to evidence that inventory has been pledged or assigned. See, most of the time, is that most of the time what will happen, we are taking the working capital loans. Is that we are taking the working capital loans. Is that we are taking the working capital loans, we will buy it, then we will sell it. Fine, we will buy it and sell it. Repeated, or see, the business is be done on borrowings. Keep it in mind. The bigger the business is, the bigger the borrowings. You are not going to invest. They say that yes, we will get the furniture, we will take the loan from the bank, and once we have made a trading, then after trading, whatever with the revenue we will get, we will repay to the bank. The bigger the business is, keep it in mind, it is a fact. Don't say that nobody in this world nowadays invest. Everyone will borrow. When you are doing the inventory, they will mention very clearly, they mention it is pledged. Means you are, that is a restricted inventory. Okay, that is the restricted inventory. The moment you are selling that inventory, definitely whichever bank has been sold, that the amount will be channelized to that bank immediately once it has been sold. I am not saying it is a loan, similar to loan. Is it? I am not saying, check on the in the
You
Google.
mean LCLTR?
Pardon?
You mean LCLTRs?
Pardon?
You mean LCLTRs facilities?
Tell me in expand again. F.
Letter of credit and letter of first receipt.
Similar to that. Okay, similar to that. Okay, pledge means, see, pledge is very extreme. Okay, pledge is very extreme case, means you are having such a conditions are attached. You cannot 1 minute. give it, yes, it is a security for the loan, is it right? You are taken the loan against that specific type of inventory,
Yeah.
is that you have taken the loan against that specific. If there are any agreements are there, then you have to review those agreements and inquire the management about any warranty obligations. Is that see, nowadays we don't have any guarantee. Okay, we don't have any. Once upon a time, even I cannot remember when we are at younger age, we used to have guarantees. Now there is no guarantee. Everywhere there is a warranty. Okay, everywhere there is a warranty. If there is any warranty obligations are there, that any damage has been done, any replacement has to be done, then we have to review the warranty obligations, because it is a present. We are talking about what? Rights and obligation. They say as simple as that. Every laptop will have a seal. Okay, at the back of the laptop you have that. If seal is broken, definitely they will not entertain any repairs. What happens if that is the case? Definitely, till the seal is not broken, they have the rights and there is a obligation. Is that till the seal is not broken, they have the obligation to replace the asset as such. So these are the things we are talking. We are not talking about a small things. We are talking about in terms of plant and machinery. There are so many. It's a huge amount of investment. Then we have to look into this. Is it right? Now 5 points are there. The first one is third-party inventory should not be included in the year inventory count. If we have sold it, build and hold, that should not be included in the inventory count. Any third party, we have to confirm that no third party inventory, no third party locations of inventory is included in the inventory listing. Listing means in the paper which has been taken for the inventory count. And review loan agreements if there are anything against the meetings. Again, when you are reviewing the loan agreements, you have to review the board minutes, because it is at the highest strategic level of management these decisions have been taken. And the last, we have to think about warranty obligation. Is it okay with you?
Yeah.
Is it?
But the first point
Yes.
doesn't specify the document need to be inspected or reviewed by the auditors.
No, we are not talking about any. See, we are not talking about a verify. See, we are verifying? The auditors are verifying. The way auditors are verifying inventory held for third parties is not included. Is it? It is. See, you will take into two places. Okay, you are talking in terms of two places. You can take it in terms of sales. I will told you somewhere here. It takes into consideration both the purchases and sales. Okay, it takes into consideration both the purchases. Inventory, that inventory held for third parties. When you are saying it is for third parties, is not included in the year. Is that means that is not our inventory. That belongs to somebody else's inventory. Okay. Maybe we have held up for any. We are not concerned about that. Okay. Maybe we have held with some other intention. In the scenario based, they will mention the points that this is they are holding the inventory for the third parties. There is some inventory will be in the transit, some inventory will be in the third party locations. Is that what they say? Verify that any inventory held for third parties means it is specifically they are saying that it is related to what? It is related to sales. Or in other case, it is not we don't have any right over that inventory. If we don't have any right over the inventory, we have to exclude that inventory. Yes, tell me please.
Okay, I got you.
Now, when you are doing this, okay, when you are talking about valuation and allocation, fine. Now, we have done this, is that somewhere we have done down the line, we have done with respect to FIFO and LIFO, okay, FIFO and LIFO. See, valuation will be done. When valuation will be done, we are not doing the valuation. First and foremost, wherever is there, first and foremost, whenever is happening, you will take that opening balances, you will take the totals, you will take the sequence, you will take the what is has been carry forward. These are the things we will focus. Whether, see, first what we'll do, first error is that we will see whether we have completely cross matched with the source document or not. You are going for a inventory audit. Okay, when you do for the inventory audit valuation, obtain a copy of, first you will ask for a copy, obtain a copy listing and agree the totals with the general ledger. First you take the copy, is it right? Once you are taking the copy, then you will see the general ledger, whether the amount that has been specified in that the source document and the amount that has been specified in the ledger is verified, matching or not. First we will see the values, okay. First, that is the first procedure we will do. Cache the inventory listing to ensure its mathematical. Then we will do the total. First we will get the copy, we will match with the general ledger. The second one is we will do the casting, means we are going to do total. Why you are doing the total? To match the accuracy, whether it is mathematically correct or not. Is it? Next, value a sample of inventory items to the invoices. Is that we'll say what is the value of sample of inventory supplier, whether we are talking in terms of quantity, we are taking in terms of price. Is it? We are taking in the vouch, means we are taking the source document and we are matching with the invoices. When you are matching in the invoices, what we are doing? Yes, for this quantity, this product, this is the price. Whether their pricing has been done accurately or not. Is that the pricing has been done accurately or whatever the price that has been listed and the same price has been invoiced or not. So first one is we will take the copy and compare with the general ledger. The second one is we are going to take the mathematical correct, casting is there. Third one is we will take the sample out to the supplier's invoice. Fourth one is where standard costing is used. Have any knowledge about this? Yes or no?
Which one is that?
Standard costing. You have done this.
The planned costing?
Huh?
The planned costing as per the budget? The projected costing, I mean.
Standard costing, you have done that variance analysis, standard price into standard quantity, actual price into actual quantity.
Is when you compare the actual cost with the projected cost or the budgeted cost, right?
No, correct. Is it? When you have to, what is the standard cost with the actual cost with the budgeted cost? Is it right? Now what happens? See, we are not going into detail about standard costing. Okay, we are not. That is the reason I am asking you. Have any knowledge, awareness about the standard costing? Standard costing is used to value the cost of the product. Okay, we use the value of the cost of the product. Is that when we are, see what happens when you are talking about the inventory? Is it right? You will have what? You will have raw materials. Is it right? You will have raw materials. You will have work in progress. Is it right? You have work in progress and you have finished goods. Now we should know whether this has been correctly the cost has been correctly arrived or not. Is it right? We have to know. You are going for any inventory count and saying that is whether when we say it's a finished goods has been proper, they have followed the procedures or not. What is the cost they have budgeted? What is the actual cost they have done? Because this will lead to the total cost of the product.
But
This will
essentially, they're going to include the actual costs, not the standard cost.
we will include the actual cost only, but it comes under the chapter title standard costing. Is it? Standard costing is standard. We are comparing actuals with the budgets only. We will take the actuals only. Okay, but all this comes under which title? It comes under the chapter name called as standard costing. Is that when we are saying it is a here we are taking the actual cost only. Okay, see what is the standard cost? Is that standard cost minus actual cost? Is that you have the variance? Is that positive variance, negative variance? Ultimately, we will take actuals only. Ultimately, we are taking actuals only. We are not going into that detail. What we are saying that whether the standard costing procedures has been followed or not to ensure whether the product has been correctly valued. When it is say correctly valued, standard costing includes, I am writing for your understanding, standard costing includes actuals. The price will be fixed on the actuals, but whether they have followed this procedure or not. That much we are concerned with. Is it okay?
Yeah.
Okay? We are not fine. For materials, agree the value. See the thing, raw materials to invoices and price list. For materials, agree the valuation of raw materials to invoices and price list. Agree whether it has been as per the price list we are purchasing. Okay, we are purchasing raw materials. Whether we have been, there will be a price list is there. Is right? There will be a supplier list will be there. There will be a whether it is for purchases or it is for sales. Okay, you will have the price list with there. That price list we have to agree that it has been matched as per the raw materials which we have been listed in the price list. Confirm an appropriate basis of valuation. Is it right? See, that is what it says. This is with respect to management accounting. Okay. Now don't get confused. Okay, if you are talking in terms of management accounting, is it in terms of management accounting? What will happen? You are talking in terms of FIFO, LIFO, and weighted average. Okay, weighted average. This is with respect to management accounting. I am putting it very clearly here. If you are talking in terms of a financial accounting, is that it is for financial accounting, then we will say it is IAS 2. Okay, then we will say whether it is the lower of cost or NRV. Is that two things, that two distinctions is there. Whenever we will ask, people will say that yes, LIFO, FIFO. No, management accounting related to FIFO, LIFO and FIFO in terms of valuation. Is it right? In terms of financial accounting, it is lower the cost of NRV. If they are asking in terms of, I think we have done this. If they mention IS2 inventory valuation, a simple reference will completely change the presentation for in our answers. Is it? Confirm that valuation basis of where is FIFO is being used. Example, they say that when they say example, you can put LIFO, FIFO, all those things. Don't write all those things. One word is more than sufficient to send a message what we want to express. Fine. For labor cost, agree to cost to wage records. See that thing? Now what happens if you take into consideration, is it that if you take into consideration, the cost sheet, okay, if you take into consideration the cost sheet, in the cost sheet, see, you will have a comprehensive understanding, okay. I'm not saying that you have to write this in your way, but you should know immediately labor cost, agree to cost to wage records. When you are talking about the cost sheet, you will have one of the things is you will have the prime cost. Materials will be there, labor will be there, overheads will be there. Direct overheads. We will have what? We will get prime cost. This is all you have done in your bachelor course, undergraduation course, you have done this. Now what happens? Fine, you have the labor cost here. Is that? You have the labor cost here. You have to agree cost to the wage records. Is a wage? See, this is the source of agreement. Okay, if whatever the cost we have done, that the same cost we have paid. Is that the same cost we have paid? That it should agree. If it is agreeing, fine. It's all well and good. Okay, well and good. Review standard labor cost to the actual cost, as you are saying now. Is that there also I have said the same thing? Is that there also we have said the same thing? Whether the standard cost and the actual cost of protection. Is that what is the standard cost? What is the actual cost? Where is the variance? Is that we are doing all this? See, management accounting is for internal purpose, but what will happen? Management accounting is for the valuation purpose also. Is that management accounting is value allocation? We are saying direct overheads, indirect overheads, works overheads, factory overheads. Is that cost of protection? Say cost of production. Likewise, you will have different classifications is there. Whether we are allocating rightly or not. Okay, we are allocating under proper head or not. That is what the purpose of valuation. If you mistakenly have allocated direct overheads into indirect overheads, it will change the entire structure with respect to the cost of the product. Is that this is what it says? Review standard labor cost to the actual cost. Reconcile labor hours to time summaries. How many hours has been worked? Is it right? How much time they have taken? Is it? How reconcile the time summaries? Whether means again with one source of document with the another source of document. Last what they say, they are talking about make inquiries to ascertain any slow moving, any obsolete inventory and should be returned down. This is one of the points which we'll cover in most of the questions. If there is any slow moving goods, obsolete goods, something which has been written down, means you have to write down the inventory, then you have to make inquiries, obtain the opinion of the management, obtain the review of the management that why it has been written down, on what basis it has been written down, discuss with the management. The review any minutes are there. You have to make sure that it is a slow moving or obsolete inventory. I'm just giving you an example, so that why I'm giving you example is at least if you have some idea, then you can recollect it and reconnect the is that you are not only why I will give is you have to recollect and immediately you have to reconnect with the concept. Is that you reconnect with the concept? Maybe if you have a concept of ABC analysis, always better control. Is that always better control analysis is there? Is that always better control? We are analyzing what are the slow moving goods, what are the fast moving goods, what are the average goods. Inventory is the area where it really matters, because in all the production and manufacturing companies, inventory is almost a major proportion of total assets. One is plant and machinery, the second one is inventory.
So for this point, they're going to inspect the inventory to assess the slow-moving inventory, right?
We should know. We should ascertain. We have to identify what is the slow moving inventory, what is the high value inventories, is it? What is the absolute inventories? I'm just they are talking about slow moving, high value inventories is also part of that. Is it right? Any slow moving. I will write this. Any high value inventories. Is that any inventories? Is that any absolute inventories? Is it how we are going to classify? Okay, how you are going to segregate the inventories. Make inquiries with the management. What are the assumptions they have made? Okay, what are the assumptions they have made? On which assumption they have identified slow moving goods? Because what happens? Some goods have slow moving, but they will not purchase it. Is that, see, when you are doing the business, you will see what are the which products will be sold very fast. You take the MacBook. Okay, you take the Apple products. You take Apple products, you will see the thing. Some you will take high value products, they will be have a slow sales will be less. You talk about the low value products, the sales will be more. Is that you cannot hold high value products? Is it getting my point? Understanding that you cannot say that I will I will get the high value products and will put on the shelf. No, high value products we have a limited stock. Low value products, fast moving products, you have more stock. This is what you are talking about, the inventory planning. Is that this is what we are talking about, the inventory planning. You should know, otherwise what will happen if you are unnecessarily we are blocking the funds in a slow moving products. Is that unnecessary we are blocking? Repercussions will be there. Your funds has been locked, your profitability will be decreased, all the things will happen subsequently. See what happens after this effect. Is it that is the reason when we are talking about in any slow moving products, the investment should be less. Fast moving products, they usually say these are the hot cakes. When you say these are the hot cakes, what does it mean? It will be sold very, very fast. Is it clear? Is it okay, Gaita and Laila?
Yes, sir.
Fine. Next, continuation. The valuation, examining prices at which, see, we are talking about what? We have taken the raw materials. Is it right? We have taken the raw materials. We have taken the work in progress. We have taken the finished goods. Examine the finished goods has been sold. Is it? Examine at which finished goods has been sold after the year end to ascertain whether any finished goods need to be returned down. Is it? See, you have completed here. Is it right? You have completed finished goods in the year 2022. It has been sold in 2023. Is that it has been sold in 2023? But when it has been completed in 2022, this should be belong to the year 2022. Costing should be done in 2022. Sales will be done in 2023. Is that costing should be done in 2022? That is the reason. Is that opening raw materials, work in progress, finished goods. Again closing raw materials, work in progress and finished goods separately. We will not show, we have not done this in the financial accounting. We don't do this in financial accounting at all. But if you take the management accounting, performance management, is that paper 5, performance management, we come across these things very precisely. If significant level of finished goods remained unsold for an unusual period, is that that has been not sold, is it right? Then discuss with the management to make allowances for that. Is it there? I will give you another way of things. The thing. You have the here you have the car dealers. Is it right? You have the car lead. They if you go to the yard, okay, if you go to the yard, the inventory they have, if as a matter of fact they will have the models of 2020, 2021, 2022 and 2023. If you go to the yards, okay, inventory yards of the car dealers, you will find that what they will do, they will reduce the value of the older cars, okay. If 2000 they will give, here they will say that yes, we are giving a discount of, we are giving a 40%, we will give 30%, we will give 20%, we will give 10%. Unusual period of time, is that we have to make an allowance, is that 40% we are what we are doing, we are making an allowance, discount allowance. Is that discount allowance? That has to be taken into consideration. Practically every point, what I want to say is every point relate to the example, then only you will understand. If you are not relating to the example, see, scenario based questions is based on the examples only. The scenario based questions is based on the examples only. Understand the scenario, 90% of your job is done. Is that any unsold? Now I give you here the example. For unusual period of time, you are here 2024, but 2020 is there. Now you have to remove that stock. Why people, what they will say, you see the thing. If you take into consideration, is it right? End of season sale. Is it end of season sale? Clearance sale. You will come across these points, is that they will say it is a clearance sale. Is that clearance sale? You see the textiles, you see the garments. Is that you see the clothing, this one. What they say, summer clothes should be in winter, winter clothes in summer. Summer clothes in winter, summer clothes in winter they will give discount. In winter clothes during summer they will give discounts. They want to clear it off. Otherwise, what will happen? If you are keeping your winter clothes in the summer on the shelf, nobody will buy. Isn't it? And you cannot lock it for a longer period. Clothing business, maybe you have come up, if you are referring question papers, there one question is there on this. They say that you are ordering, when you are a clothing business, the styles will change very rapidly. Fashions will change very rapidly. Fashions are different in different locations. This is what we are talking about. Significant finished goods. It applies to cars, it applies to clothing, it applies to the durables, especially the durables. Fine. Now this is what it says. Compare, again we are saying, compare the gross profit to the previous year or industry data. If there is any misclassification, whether gross profit has correctly calculated or not. Is that slowly now see, once we done scenario question, you will have more clear understanding. You can relate the theory with the scenario question. It says that compare raw material, finished products and turnover. We have done this in financial accounting, inventory turnover. Is that inventory turnover? What we'll say what is the inventory turnover? Inventory turnover should be less number of days. Inventory turnover should be less. We are not calculating anything unless and until they gave you the values. Very few questions they gave you the values. In the old pattern they gave you more question related to ratio. Ratio analysis we are not going to do again what we are doing in the financial accounting. Is it what we are doing? We are talking about comparative to know whether the total whether the company standard is with the industry average or not, whether it is less or it is more. If it is turnover is more, is it? Turnover is more means number of times. Is that you have to number of times times it should be more, number of days it should be less. Is it? It makes sense. Compare inventory days to the previous inventory. What happens? Last year what happened? What number of inventory days, and this year number of inventory days. Last year how many times you have converted? This year how many times you have converted? Little bit. When we are doing this, okay? Little bit inventory turnover, receivables turnover, receivables turnover, cash ratio. Sorry, current ratio, quick ratio, gross profit ratio, operating profit ratio. These 6 ratios you remember. We have a clarity on that. Gross profit, net profit, inventory, receivables, payables. Fine?
The quick ratio is what?
Pardon?
The quick ratio.
Yeah, quick ratio. Little bit. What I want to say is, just have a look, okay? Because see, they are expecting you have done FR, okay? Financial reporting is done. Based on the financial reporting, whatever, see, this is what it says. You are doing audit here. Don't say that I have done audit and I have to forget about audit. Audit will come somewhere in SBR. Audit will come somewhere in SBL. Audit will come somewhere. It will a part. It will not be a, but 5%, 3%, 10%, maximum this will be there. Somewhere it will be tested. We cannot say that we have completed, we have to forget this subject. Is it? Compare current year standard cost with the previous year after considering current conditions. See what happens now, you see the thing. Why you are comparing standard cost? Because there is a inflation will be there in the market. Is it right? Because of the inflation, what will happen? The actual cost will increase. Is it? The actual cost will increase. We are making how much it has been increased. It adds, is it right? It adds to the cost planning. It adds to the cost planning. Is that you should know? They should also know that yes, whether the prices has been increased, where it has been increased, where it has been decreased, where there is economical, all these things we are going to work out. Compare the cost with the previous year. Compare actual manufacturing overheads with the budgeted. See this, if you ask me, this is all comes under standard costing. The moment you variance analysis, is it? It comes in standard costing, or it comes in where? It comes in variance analysis. Is it? This way we have to work it out. Is it? This is the way we have to work it out in terms of valuation and allocation. Inventory is a big chapter. Inventory, I am telling you on record, inventory they will test one question on substantive procedures. 5 marks, 4 marks, 5 marks, 6 marks. In some cases they will give more weightage for inventory and property, plant and equipment. Is it okay? Fine. Now when you are talking about this thing, again I am saying this. Is it right? I am putting you in a very, very clear mode. Is it right? You will have the purchases, you will have the sales. Inventory is the focal point. Okay, inventory is the focal point. What will happen? You should know what note the number cutoff. Cutoff, the same process. Cutoff is based on the date. GDNs, goods delivery note. Is it? Goods delivery note. Is it? We will not use this. We will use GDNs. In the exam also you can use GDNs, but clarity has to be there. Whereas in terms of purchases you are using goods received note.
Because for GDN sometimes you are referring to goods dispatch notes.
Both are same, na? Goods delivery note or goods dispatch note.
The same.
Goods not same. I will put, if you ask me, there is lot of difference is there. Is it right? goods dispatched and goods delivery. Goods dispatched from the warehouse.
Yeah,
Is that goods delivery to the client?
yeah.
Is that goods dispatch notice to the way from the warehouse? You have dispatched, done. It's not, it's almost, what will happen immediately? If you are doing that, immediately your inventory count will decrease. Is it right? Inventory count will be decreased. Is it right? You good dispatch note. Okay. Good dispatch. Inventory count will decrease. Immediately inventory count is decreasing. You have to update the inventory records. Is that you have to update the inventory record. Note that the numbers of large GDN and GRN before year end and first GDN and GRN. You have said the large GDN is, I am just putting it, is it right? 2023 year and large GDN is 45. Is that here how much? 2023 is the year and large GDN is 16. Then you say what is the GDN will be how much? 2024 01. Is it? Here also what will happen? 2024. Sorry, 1 minute. Is that 2024? How much is there? Here 45. We have to say 46. 2024 16. It says 2023 16. 2024 17. Continuation has to be there. We should track it that nothing has been missed during the period. Is that nothing has been, note the numbers of large GDNs and GRNs before year end and first GDNs and GRNs after the year end. Whether this has been included in correct financial year by reviewing the ledger. Are you okay about this?
Yeah.
Yes, Gayatri and Laila. I'm not listening your voice.
Yes, sir, it is clear for me.
Is it little bit heavy? I'm telling you very simple. I'm not keeping you behind any doubt that I'm just telling you it's little bit thinking subject. Is it? It's little bit thinking subject. I can say we have to be little bit more focused. It will not come instantly. Okay, the moment we'll do again and again inventory, particularly inventory. I'm telling you this, particular inventory, substantive procedures are little bit challenging and inventory is little bit more. What we say? Accuracy. Okay, accuracy in terms of totaling. Okay, the moment you say accuracy in terms of totaling. Obtain a copy of listing. Listing means nothing but the serial number, description, quantity, price, total. That is the listing, and cast it and test the mathematical extensions of quantity multiplied by price. Is that obtain the listings? Okay, the listing means you will have all the things. I will write here. You will have serial number, you have description, is that you have description, you have quantity, you have price, you have total. Is that you are talking about quantity into price, it will become total. Okay, this is what we are talking about the listing. Trace counts back to the inventory. See, you are having 1, 2, 3, 4, 5, 6. Is it? Here you are having how many items? 6 items. You have to trace back that the 6 items, here we have taken 6 items, the same 6 items are there in our source document. This is what happened in the last question. Is it right? When they are counting the inventory, some inventory has not been listed. If some inventory is not in list, definitely it is inaccurate. Is right? We cannot say whatever the inventory has been listed has to be there exist. Is it? What that is? If the entity has adjusted, if the entity has been made any adjustment to the general ledger to agree with the inventory, agree the two amounts. If you have made any adjustments, and if you have made any adjustments, fine, to the general ledger. Is it? Maybe they have made some adjustments. Is it right? Definitely, we'll go this at a more detailed level. Okay, who has to do adjustments, how it has to be authorized, how it has to be approved. There are so many things are there. But in the initial stages, if they say that if there is any adjustments, okay, the general ledger and the physical counts has to be same. Is that has to be same. When a continuous, is that perpetual inventory system is in maintained, total of inventory counting listing to the continuous inventory records. Little bit more specific with respect to perpetual inventory. Perpetually, why it is more important? More risk is attached to this. That's all. Nothing is there. Is that the risk? The risk is high when you are talking about continuous inventory. It says that when you are doing a continuous is maintained, the total of the inventory listing to the continuous records using computer assisted audit techniques. When you are having a perpetual continuous inventory, is it right? Make sure that yes, it has been counted. It has been counted. It has been flagged off. Okay. These are the words we will use. Is it right? It has to be flagged off. It has to be marked. Is that you have to separate it. Is it right? So you have to separate it because you cannot stop production. Okay, you cannot stop the production line. Okay, you cannot stop the production line. Production line will be continuously in motion. If that is the case, there should be some point where we have to put a mark. Okay, put a mark to desegregate. Fine. Especially this is what happens especially at the end of the year. How you have to take into consideration means whenever is there using you have to take the computer assisted audit techniques. How we are doing it? It comes slowly in the next slides. Read the notes financial statement that the information is accurate and properly presented at the appropriate amounts. In the notes to the financial statements, they will give a brief description. They will give a brief description. What about how we have been valued? Is it how it has been valued? Because in the notes to the accounts, it is nothing but a presentation and disclosure. Is it? In the notes to the account, it is a presentation and disclosure. When you are talking about presentation and disclosure, notes to the accounts give a very brief. If you come across a time, refer notes to the accounts. Just for a very focused one, inventory, you will find inventory, plant and equipment, cash, receivables, payables, everything will have a brief description. I am not saying that you have to memorize. This is only to understand why they are asking us to refer notes to the accounts. Only to understand why it is needed. Is that what we are doing? First we have to obtain the copy of the listing and we have to multiply quantity by price. You have to trace back about the inventory listing. Anything it has been adjusted, you have to verify both the totals. We have to, if there is any perpetual inventory, continuous inventory, we have to agree the total of listing with respect to the records. And the last one is we have to refer the notes to the financial statements.
So for the first point, we have to perform it based on samples.
Everywhere it will be a sample only. Now, obtain a copy means it is sample only. Is it right? Obtain a copy of the inventory listing.
Total, right?
Pardon?
forecasting means taking the total and taking the
Total,
risk.
yeah, taking the total. You will have so many inventories are there. So many different classification of inventories will be there. You will do the total for each and every one.
Okay, okay.
Can we do that? Is it? Can we do that? Each and every one total we can do. You take the grocery, you take the grocery shops, you take the pharmacy, you take the automobile spares. Okay, you take the automobile space, you take the milk industry. Can we do everything every day? We cannot. We will do only doing a sample. Based on the sample, we will make an assessment. So what is the substantive procedures? If test of controls are sufficient, we will do restricted. If test of controls are ineffective, we will do substantial. Are you referring that one? See the thing.
Yeah.
Is that if test, is that I will go back to that, okay? If test of
But
control,
even for substantive procedures, we are doing based on samples.
100%. 100, there is nothing like, is there? Substantial process based on samples, is that? See the things. This is the point people should understand, is it right? This is, see what we'll do. If it is unsatisfactory, then you do substantive procedures. Even it is satisfactory, you will do substantive procedures. But when you are doing substantive procedures, we are doing substantive procedure on the sample basis only. If you find materiality difference, then you will increase the sample size. Is it clear?
Yeah.
When you are asking me questions, when asking the questions, then it means people are focusing, they are going in depth, okay? They are going in depth with the subject as such, okay? Next. Are you clear about this?
Yeah, and you mentioned here we have to flag those. We have to flag what exactly?
Where?
The adjustment. The fourth point.
1, 2, 3. Where a continuous inventory system is maintained, agree the total of the inventory listing to the continuous inventory records.
You have to flag the adjustments or what?
Agree to the total inventory listing, the continuous, as it happens, is it right? As it happens, I can put it on it has to be on real time basis. When you are using computer aided audit techniques, it means that it's on a real time. See what's happening, as simple as that. Okay, I will come to this. Is it right? I will come to this continuous inventory. A simple example I will give. You are talking in terms of online purchase. Okay, online purchase. What they will say in online purchase, they will say quantity available. Is right? In online purchase, they will say quantity available. Quantity available is 4. Take example. Quantity available is 4. Is that you are thinking for a while. Yes, I have to do. Maybe you will take time to compare with others. 5 minutes are over. 10 minutes are over. Then you will click on this. Is that you will click on this? They will refresh it. The moment they are refreshing it, what will happen? It will become 2. Is right? It will become 2. Airline industry. Understand what? Take example of airline industry. Okay? Airline industry. For airline industry, the tickets are inventory. Is that the airline tickets are inventory? That is the stock they are selling. Is it right? What will happen airline industry? You within a span of moment that if there is a demand and season, what will happen? It will be booked. The tickets will be booked. Is it that? For the airline industry, the tickets are inventory. Automatically what will happen? It is a continuous. Is that? It is a continuous online real time basis. It works. Is that? It works real time basis. It has to agree the total of inventory listing, continuous inventory records. You are listing 4. When you say 4 seats are available, means as per inventory 4 seats has to be there. Got my point? That is the reason I told you have 4 seats. You will say yes, I want to take Etihad, I have to take Turkish Airlines, I have to take. You will compare where the tickets are pricing are less, where there is connectivity network. Okay, you will come and decide that okay, I will go with this one which is showing 4. When you have entered the thing, it will show 4. By the time you will say yes, automatically what will happen? A split of second it will take. It will refresh. The moment it will refresh, tickets will become 2. This is the example of a perpetual inventory. Is it clear to you? Okay, this is the example of perpetual inventory. The moment you stop me now, definitely, I'm not saying, but I will give more specific one. Okay. Next, substantive audit procedure for classification and review the inventory listing to ensure that properly classified. How you have to classify? You have what is the raw materials, what is the work in progress, and what is the finished goods. As a matter of fact, I told you in the beginning, whenever you say it is a opening and closing, opening will be raw material, work in progress, and finished goods. Closing will also be raw materials, work in progress, and finished goods. We don't do in financial accounting. Financial accounting, we will take the total only. Is it financial accounting? Or if you go to advanced level of financial accounting, then maybe in some extreme cases, nowadays it was there in the previous some years back, but now they are not talking about all those things. In management accounting, you will have what is the raw. If you prepare a cost sheet, okay, if you prepare a cost sheet, you will have a clear understanding about this. Opening balance of raw materials, okay, closing balance of raw materials. Then you will say opening balance of work in progress, closing balance of work in progress, and the last is opening balance of finished goods and closing balance of finished goods. Prime cost, works cost, cost of production. Is it? You are talking about this comes in the prime cost, this comes in the works cost. Is that? This comes in the work cost, this comes in the cost of production. You will have a company. This is what the auditing. The reason why people find auditing difficult is auditing should have very comprehensive knowledge about not each one. It spreads across all the streams of the accounting. All the streams of accounting. How costing is done, how taxation is done, how cash is balanced. Everyone you should have a clear picture. Is that when you are making a classification, you have to make a classification in terms of raw materials, in terms of work in progress, in terms of finished. Read the notes to the accounts. Whenever there is a doubt, you should read the notes to the account for the understandability. Fine. Now, ISA 4501 audit evidence, specific consideration for selected items. For selected items, okay, some items are high valued. There is some items will have every time revaluation should be done. Is it? So they will give, there's some items of jewel, if you are doing an audit for a jewelry company, what are the things you have to, real estate company, what are the things you should assume. If you are talking in terms of oil industry, is that if you are talking in terms of oil industry, oil sector, what we have to do. In terms of automobile sector, what we have to do. Selected items, technology audit, technology products, what you have to do. What happen technological products, the new technology comes, the old technology prices will decrease. Inventory provides an evidence of existence and more important condition of inventory. Is it? Condition of inventory. If inventory is material, valued, if inventory is valued, high valued, what are the management instructions, what are the performs and what are the counting procedures, inspect the inventory and perform the test counts. It's very specific with respect to IES 501. Is it? What are the management instructions? What management is saying, see, if management instructions are followed, fine, that's very clear. You ask with the management, discuss with the management, get a response from the management, fine. If it is justifiable, we are not going to do anything else. If it is justifiable, we are not going to do anything else. Inventory, is that? No. Inventory counting methods, is that? What we have to do before and, is that? Physical counts at year end. Is that? Physical counts at year end. Physical counts before and after year end. Is that? Before the year end and after the, means closing and opening, and perpetual inventory counting. Here, perpetual inventory counting. Now, audit, when we are talking about continuous, see, immediately they will put on continuous, okay, but perpetual. Auditors needs to verify that that all inventory lines, see, this is what it says, we have not done this. All inventory lines at least once a year. This is the one, this is what we have not done, and we have taken the question on Saturday. That is the reason we find it very difficult. Is that at least all lines should be tested once if it is a continuous inventory. You should have you have to keep up to date. When we say up to date, it is on real time basis and it is online basis. Perpetual count. Simple, I don't want to say anything. Very simple, I will say anything you are purchasing online. The same example what I told you before. Okay? It has to be updated. Every second it will get updated. Procedures for inventory count has satisfied procedures for inventory counts and in test counting. Now you are seeing on the online screen you are seeing 5, but on the offline physical you are seeing 6. Is that online you are seeing 5 items available, but if you say physical items you are seeing 6, means one is not delivered. Is it right? One is not delivered. It has been sold but not delivered. Likewise, you have to investigate and correct all material differences. If there is a difference, you have to focus. You have to investigate and you have to make correction. Is that? You have to make correction. That is what it says. Now you will come. You say build and hold. You see the things. If you see Amazon, is that you are purchasing on online. Amazon, what would say? It will be delivered within 3 working days. But once you have paid, automatically the inventory will decrease. And there is a, see, this is the precondition, is it right? This is the precondition. Whenever you are reflecting an online, you have to reflect quantity available. Is that you have to reflect what is the quantity available. Is that, and it's a global network. It is not one area where even you take a country specific. It's not a small population. It is a huge population. Is it right? Next, before the count, during the count, after the count. Understand point? While revising, revise it 2 times. Is it? Before the count, what you have to do, whether arrangements has been done properly. Which arrangements? Review what they have done last year. What they have done last year. That gives you an scope, idea. Okay? That gives an idea of what we have to do. Discuss arrangements with the management. Whether you have done, see, it is inventory. You have to inform them. You have to make them in advance. Everything means we are informing means we are not saying that you have to do corrections, anything. No, we have to say that we are for a inventory count. Discuss with the management that the arrangements has been done. Everyone is there or not. What are the key factors in terms of risk? What are the material items? In which locations we are doing inventory count. Okay. Sometimes some locations you have very high valued goods. In some locations you have the scrap. Okay. In some locations you will put a scrap. Even you have to know absolute inventory. Why it has been done, why it has not been written off, what are the procedures to be followed to write it down. Is that in terms of location? Review count instructions. The instructions will be then how to perform the procedures. Is that? Review the in terms of from the organization, from the counting perspective, and from the recording perspective. How it has to be counted and how it has to be recorded. Who has to record? How many people? See, I will write very simple. Is it right? Who will record? Is it right? Who will record? Who will verify? Is it right? Who are the 2 people? Is it right? Two staff. Is it right? Segregation of duties. Is that segregation of duties? Fine. You should, who will record, who will attend, is that who will verify, as an external auditor, who will attend. Who are the 2 internal staff? One person will count, one person will record. Both will sign. Who will verify? Is that? These are the inventory count instructions. Printed sheets. Is that you should have a printed sheets. You should have a printed sheets in sequence number. Multiple sheets are there, should be in the sequence number. These all points I am telling you from the examination questions only. From the examination questions only. What it is coming to my mind, I am just sharing this with you. Plan procedures, representative selection. We are not doing all. Okay, we are not doing all. We will select which one which we have to do. It is your judgment. Is that you are using high value items. Is that it is all, now you say it is all on the sample basis. Inventory held by the third parties. Need for if there is any expert valuer needed. Is that if any expert valuer needed? Again I am revising. If it is done by the expert valuer, we have to see what is his qualification, what is his experience, what are his judgment, what are his assumptions. Is that what are his assumptions? That we have done in the previous chapter. Okay, previous chapters. Fine. This is before the count. What are the before the count? Pardon?
Why do we need to have the inventory sheets based on sequence?
Yeah. Is it? You have, now I will tell you. Okay. How many sheets you are having? You are having 12 sheets. Okay. You are having 1 by 12, 2 by 12, 3 by 12, 4 by 12. Why will put this one?
To ensure that each line is considered.
Each paper is there. Is it right? Each paper is there. all pages are there. Is it right? All pages are there. If you take the Word file, is it right? You take the Word file. In the Word file, you insert page numbers. You have the option. In Excel, you insert page numbers. You have the option. What are the total number of pages? And for each page, they will put the number. Is it clear? Everywhere. You ask me, I will give you an example which is related to that. Is that? You ask me, I will give an example which is related to that. Okay. Now, during the count, very important. Okay. During the count, that the clan staff, the staff is following instructions, and to ensure that count is complete and count is accurate. During the count, the staff has to follow the instructions to ensure that it is complete and accurate. Performs test counts. Is that? Perform test counts. Ran on a sample basis. Is that? Test counts on the to ensure that the procedures and controls are working properly. Randomly you do test counts. Okay. Sorry. Is that? Randomly you do test counts, okay, to ensure that yes, procedures are perfect. Randomly you do whether the staff, you cannot say that you cannot follow the staff at each and every level, each and every stage. Is it right? There are different team members will be there who are doing the counting. You go there, one location. You don't go to the another counting place. You go to the another counting place. Is it? To know and gain evidence over existence and completeness of inventory. See the inventory. Yes, somebody is counting. Immediately go there. Then you see randomly what he is doing, and what immediately you take what the sheet or register, and you see what is physical inventory is there. If it is matching, fine. Okay, you have every right as an external auditor. You have the complete right on that. Ensure that procedures. What is the procedures for damaged goods, obsolete goods, slow moving goods? Is it? Operate properly by observations. That procedures are there. How they are identifying damaged goods, how they are identifying obsolete goods, how they are identifying slow moving goods. Confirm that inventory on behalf of third parties is separately identified and accounted. Inventory held on behalf of third parties means if they have anything which has been sold. Okay, if it has been sold, it has to be excluded. If you don't exclude, it is going to be overstated. Is that? Held by on behalf of the third party. Conclude with during the count. Okay, during the count, whether the count has been properly carried out and is sufficient reliable on the basis of existence of inventory. That have been properly carried out the procedures. Is that more sufficient? They say it is sufficiently reliable. Now, consider any amendment is necessary to subsequent audit procedures. Fine, we are not going to say that this is a hard and fast rule. Okay, some adjustments will be needed. Some adjustments will be needed. Some corrections will be there. Okay, I am not saying there will be some corrections, but corrections has to be verified, authorized and corrected. Okay, verified, authorized and corrected. If there are any errors, you have to make corrections on that. Okay, that's very important. Any amendments, any changes. Is it? Any change. Give an overall impression that levels and values of inventory so that in the auditors in due course judge the figures in inventory appear in the financial statement is reasonable. Once we are saying reasonable, it means that they are doing on sample basis.
So here we're including internal controls, right?
Pardon?
We're including internal controls here, right?
Where we are including internal controls, we are including internal controls here. They are counting, is it? They are counting. The staff is counting. You also doing some counts. Randomly you will do on a sample basis. You will also act as a staff and you will also count the inventory. Is it? You also count the inventory. Is it? Want to know that working properly. You want to know the evidence that there is existence and completeness of inventory. What is the test count? Test count is you are doing. Is that? You will do for a sample. Okay, you will take the sheet and you say that there are two people are there. You will take the sheet of one person and you say that yes, whatever he is doing, you act on his behalf and you will perform. So that you will gain evidence that yes, it is existence and more importantly, completeness. Is it clear?
Yeah.
Now, after the count, during the count, before the count, during the count, after the count. They will not ask all. Understand point? They will never ask all. In this, I am telling you this, from this, you will, based on scenario, you will get any 2 to 3 points maximum. I will take only, if they talk about inventory procedure, maximum 2 points. They will mention during the count this has been happened. They are doing like this. Then, is it during the count? Yes, that's what we are. During the count, we find that listing in some items have been not listed. After the count, okay? After that, what we are doing? Trace the trace item that were tested counted to final inventory sheets. Whatever the items has been tested, that has to be taken over in the final sheets. Whatever we have counted and whatever is there in the final sheets. Always two things will be there, okay? One is source, one is destination. One is source, one is evidence, and one is the destination. Always two things. Observe, all count records has been included in final inventory sheets. All the records has been there or not. All the sequence numbers is there or not. All the inventories are there or not. 50 inventories. You are 50 lines are there, here 50 lines are there. Inspect inventory sheets. Now you are talking about the thing. That's what I say. 1 by 12, like 11 by 12, 12 by 12. Is it? That to ensure they are supported by count records. Ensure continuous inventory records has been adjusted to amount physically counted or measured. Continuous inventory, is it? Continuous inventory, what will happen? Definitely there will be a gap, okay? There will be some margin of error will be there here. Is that? There will be some margin of error will be there. Is that? Precisely, accurately, it's very difficult. Take my word. Precisely, accurately, very difficult. Margin of error. What is margin of error? Should be minimum to the lowest extent. Is that? The differences, if there is any differences, it has to be investigated. Confirm cutoff, okay? Confirm cutoff by using the last serial number of goods inwards and outward notes, GRN and GDNs. Is that goods received note and goods dispatched note? And details of movement during the account. Any replies from the third party? A review replies from third party our inventory held by or for them. Held by is, it is related to purchases. Held for them, it is related to sales. Client final valuation of inventory. Okay, the total the final valuation of the inventory. Any queries are there? Notify problems to the management. Are you clear about this?
Yeah.
Just we go through it, okay? Just we go through it. Inventory held by third parties. If inventory held by third parties is material, get direct confirmation, okay? That get direct confirmation, external confirmation. Is that if inventory held by the third parties, inspection or appropriate. First you have to inspect at the third party location, or what are the appropriate audit procedures we have to follow. What are the audit procedures if inventory held by the third party? You have to attending or arranging for another auditor to attend. Is it? You have either you have to attend personally or on your own, or you can arrange another auditor. Another auditor is not another auditor within the firm. Okay. Obtain another auditor's report on the adequacy of the third party internal controls, whether internal controls are effective and they have properly counted. Inspecting documents in respect of the third party inventory. It is both, I am telling you again, it is both in terms of purchases, in terms of sales. Okay, they have not mentioned that, but it is part of that. Any inventory has been have with the third party confirmation from other parties where inventory has been pledged or there is collateral. Where it is there against any security are there, or you have any guarantees are there, any conditions are there. Okay, if any conditions are attached to the inventory, we have to get the confirmation. Means when you are getting the why we are doing requesting confirmation, whether we own the inventory rights. Okay, it rights, and is there any obligations? Is that what is the cutoff? There should be no movements during the inventory count. Is that there should be no movements? That's why I gave the example of a bank. Okay, I gave the example of a bank 31st December. Okay, 31st December. There is no movement of cash. Receipts and dispatch should be suspended during the account. If it is not possible to suspend, these should be kept separate from other inventory and carefully document. If it is not done, extreme cases, then fine, whatever is happening during that day, 31st December, things should be identified separately and stated
But
that.
it will still be encoded in the system because of the perpetual inventory system used.
But we can identify what happened during that particular day.
So we're not going to consider the records of the new inventory.
No, why we not consider? See, if that is the case, 30th December, we will, what is the inventory on 30th December, okay? and if there is a continuous inventory, 31st December we will make it separately. Then what will happen once the process is completed? Then we will add up the 30th and 31st December, and we will come to a conclusion that what is the inventory on 31st December. Okay, we see first we will take all the precautions. If nothing is work, then we will see yes what is the best option. Is it okay?
Yeah.
First we'll see the all the options. If not working, then definitely we will come to a alternative. See the things. Inventory before and after. Is it include before goods received note? Okay. Purchases, if it is included in purchases, included in payables, included in inventories. Okay. Is that where we have included? That's very important. Is that after included in purchases, payables, or in, see now you can understand. You will have the first you will make a purchase, then you are going to make payment for that. Once you have payment, then it will be part of the inventory. Is that it will be part of the inventory where we have if you have included before GRN and after GRN, actually where it has to be reflected. We should not get mismatch. Okay, once it has been included, we have to identify that it has been included in purchases, it has included in payables, or it has included in inventory. Yeah, it has the same happens with respect to goods dispatch note. Is it right? If it is before, it will be not in sales. Okay, after goods delivery note, it will be included in sales. After goods delivery note, it will be included in receivables. Before goods delivery note, it will be included in inventory. After delivery note, it will not be included in delivery. Automatically after goods dispatch note, what will happen? The inventory will get decreased. After dispatch, goods dispatch, the sales will increase. Okay, after dispatch, the receivables will increase. Okay, after dispatch, the goods sales will increase. After dispatch, the receivables will increase, and after dispatch, the inventory will decrease. This is the where we have to include. Is that where we have to include, where we should not include. Is that this is that is, see, if you don't get confused with FIFO and inventory as per the valuation, inventory should be valued at lower the cost. I will write for your understanding IS2 inventory. Auditors need to understand how the cost is determined. When you are talking about the cost, then it will become FIFO and LIFO. Okay, example FIFO, LIFO, weighted average. Cost should include an appropriate proportion of overheads. Is that percentage allocation? Percentage allocation of the overheads. Direct overheads, fixed overheads. Is that you will have so many things. See, this is the reason people will understand, but students should have all this, then only they will understand what are the fixed overheads, what are the variable overheads, where we have to take fixed overheads, where we have simply if I say that proportion of overheads, is it proportion of overheads? This is what this is the difference, and this is the students find difficult. Instantly they will come and say auditing, and once they come, they get all the exemptions. Okay, now all the exemptions are immediately you have to relate where we have done with respect to FIFO, LIFO, where we have done with respect to standard costing, where it has been done with respect to overheads. Then automatically a a concept of understanding will be developed in our mind. As there are many ways to determine cost, management should be used method consistently and which give fair approximation to cost. Methods of costing. Is it right? Just I am telling you for your so that I want to make sure that you will have batch costing, you have job costing, you have process costing, you have contract costing. Is it? These are called as methods of costing. Is it right? You should know what is the job costing, what is the process costing, what is the batch costing, what is the contract costing. Then things will find. Yes, automatically you understand that there are many ways. Is it? There are many ways to determine cost, many methods to determine cost. Management should be consistent. You should not say that I am using batch costing and then I will use process costing. No. Process costing for milk industry, process costing for sugar industry. You are processing from one stage to another stage. Is that contract costing for construction industries? Is that job costing? Is that job costing for hotel industry? You are placing in orders for 50 people. You are placing in orders for 100 people. Well, how they will do? They will do with respect to job costing. Is it? These are all the things you should have then only the valuation will work. Okay? Well, we are talking about valuation with respect to raw materials, valuation with respect to work in progress. Valuation with respect to raw materials, you use invoices, supplier invoices, quantity, price. If the same thing they have, what we have done, if standard cost used, check the standards, compare with the actuals. And if there is any variance, just treat it appropriately. Identify. Is a work in progress of finished goods? Use analytical procedures. Analytical procedures is nothing but what happens in prior year. Tell me please.
No, I'm good.
Okay. Is a what analytical procedure? Prior year. Analytical procedures is not what are the industry standards. What are the industry standards? You should have a reasonableness of checking. Is that you should be reasonable. You should not overestimate. Is that neither overestimate. Okay, neither overestimate or underestimate. Cost versus net realizable value. Is that this is where we have done, we have not done, but it is there. If there is a time, I will do a small calculation in next time. Whenever you will come across this, I will do a small calculation. Okay, just to understand the concept. Okay, net realizable value is nothing but selling cost minus cost to sell. Okay, we should know which cost is less. That cost we have to take it. Is that net realizable value lesser than cost when increase in cost or a fall in selling price. Net realizable value, is it right? If the cost will increase, is it right? If the cost will increase or selling price is decreasing, you will if the selling price is decreasing, definitely you will realize lesser value. Is it? If physical deterioration of the product, you will get lesser value. Okay, I told you that you are giving 40% off, 30% off, 20% off. Is that 10% off? Clearance sale. Is that clearance sale? This is all with respect to net realizable value. Okay, net realizable value. Obsolescence of the product. Is that outdated technology? A marketing decision to manufacture and sell products at a loss. Or you sometimes what will happen, you see the thing sale. They say that sale, this product is 70% off. Is that this product is 70% off. There will be some damage will be there. Because of that, they will give 70% off. They will not give 70%, 80% off on any product simply like that. Is it okay?
Yeah.
What they say, Questions we have done. Questions of inventory likely to come up in scenario to provide the procedures. Okay. Inventory has been tested by F8 examiner several times. Requirements may tend to focus on particular statement assertion, rights and obligation, valuation, classification, is it? And the substantive audit procedures. The examiner has commented that time after time that candidates do not provide enough detail in procedures or fail to provide test for a specific assertion. Okay, just have this. This is means we should not do these mistakes. We should not provide a general answers, is it, without presented with. Is it? What it says, the same thing. This has been given at the end of every chapter now. Okay, at the end of the means we should just discuss. We should not say only discuss with the management. Once we say discuss with the management, what we are discussing with the management is important. Is it? If you are saying check for existence, what we are checking: physical count, absolute inventory, slow moving inventory, what we are checking for existence. Okay, that is very important. Do not use check. Okay, do not use check or ensure as a general rule. Okay, whenever you are doing audit procedures, compare. Okay, compare. We have to compare. You have to obtain evidence. Okay, likewise you have to use. We should not say yes, it is check or ensure. You must use inspect, discuss, observe, recalculate. Fine. Questions on audit risk and response may require you to apply the knowledge you have gained from this chapter. Is it clear to you?